Hey everybody, welcome back. Today we're going to be focusing one of our favorite cybersecurity companies, Fortinet. Fortinet provides cybersecurity services to multiple areas. You can see physical location like offices or factories, private data centers and networks, and then also public data centers or the cloud.
So cybersecurity is one of our secular growth trends that we follow here at Chipstock Investor. Of course, semiconductors, but closely related to all of this cybersecurity services, infrastructure. Fortinet focuses on, as Casey said, that network security and cloud security, the two biggest portions of this $215 billion in annual spending. And that's still growing at a very, very strong pace. About 12% is the expected growth rate for overall cybersecurity services in the next 5 to 7 years. And while Fortinet is historically a network security provider, we'll come back to this in just a moment, they are continuing to push further into cloud-based services and software, which you can see in the blue and the teal colored boxes that Fortinet provides in this slide here.
And one of the most unique things about Fortinet, it's all of these software services are built on top of their custom hardware, their custom silicon chips or ASICs, application specific integrated circuits, and they utilize a single operating system that Fortinet provides. In this chart, you can see them stacked up against many of their competitors, Palo Alto Networks, Check Point, Cisco, Zscaler. But if you're a business and you're looking for multiple segments, network firewall, SD-WAN, single vendor SASE, Fortinet actually provides all of those services all on one platform, which is pretty unique.
Yeah, it makes things nice and convenient if you're an IT team, if you're a security team, and you're not having to go to multiple places to patch things together, look at multiple modules from different providers. Everything's nice and unified and tidy.
The single vendor is definitely something that's trying to take root. We've talked about that with Palo Alto Networks in a number of videos, and they're definitely leaning that direction. And so have some of Fortinet's other competitors as well. But Fortinet did it first.
All thanks to custom chips. So Casey, let me ask you a question here. When we're talking about competitors for Fortinet, we often compare it to the other big two, Palo Alto Networks, CrowdStrike, Zscaler, which we cover as well. Is that an accurate comparison?
Those companies are definitely peers of Fortinet, but there is actually a ton of overlap with what they do specifically with other big network hardware businesses like Cisco. Fortinet, unlike other big cybersecurity platforms, actually undergoes growth cycles that align more with our semi-end market cycle chart. Cloud and enterprise computing is in particular where Fortinet would sit. And it's been a long 2-year plus down cycle for Fortinet as well.
Indeed, it has been. But the good news is it looks like we are at the start of a new growth cycle for cloud and enterprise networking hardware and computing hardware. And this is significant for Fortinet because to date, despite a really big and obvious push into recurring software services, especially for the cloud. Today, Fortinet still derives about 40% of its total sales from hardware products. Again, one of these are networking devices that compete with things like that are offered from Cisco. So you can see pretty ugly downturn there that started at the tail end of 2022 with the last peak in the red bar chart. But you can see the last couple of quarters, things are starting to trend back up in the right direction. It would indeed seem like a lot of other companies, especially semiconductor companies, have been indicating we're at the cusp of a new growth cycle for cloud and enterprise hardware, excluding all things accelerated computing and AI from NVIDIA. And Fortinet is also indicating the same thing. So Fortinet does have a unique strategy in how it lands the blue bars here that you see on this chart. What they do is they sell the hardware gets installed at their customers, and then later on, the software service portion of the deal they cut with their business customers then gets turned on. So that's why the blue bars are much more steady up and to the right versus the more choppy red bars that you see on this chart here. So in Q3 2024, product sales, nice sequential increase. We're back in very slight, very modest year-over-year growth mode, but the services revenue actually still increased 19% year over year, thanks to that long tail over the last few years where they were actually installing lots of new hardware. The service is continuing to get turned on and generating positive revenue for Fortinet overall. That works a little bit different than cybersecurity and privacy services for us as individuals, right? We don't necessarily need specific customized hardware to protect our personal data, right, Casey?
Even though we're robots.
Even though we are robots.
But this is a great time to talk about the sponsor of today's video, Aura.com. This year, we have seen a number of high-profile data breaches, raising some pretty serious concerns about personal information security. We don't need to run through all of them, but there was a lot. There was one from Dell. There was one that really concerned me from United Health. They confirmed 100 million of their users had their data stolen, which is the biggest healthcare breach in US history.
Yeah. So Casey, I know you recently started using Aura because of some concerns over personal privacy, data security, and whatnot. What are some of the things that you get with Aura?
Aura monitors all of your personal data, including your social security number, across all kinds of data points like the dark web and public court records, and it alerts you to potential identity theft. They also provide up to $5 million in identity theft insurance in case the worst possible scenario happens. They've also got a bunch of other features like real-time alerts for data breaches, VPN, a password manager. You can try Aura for free using our link here on the screen, as well as in the description below. You can try it for 2 weeks for free.
Not a bad deal.
Okay, let's get back to Fortinet.
And enterprise security, different needs than for us consumers. So in spite of this down cycle for Fortinet and the enterprise computing end market overall, they actually have continued to log new all-time record sales. They did so again in Q3, 1.51 billion. Again, a pretty modest year-over-year increase, but let's give credit where credit's due here. Fortinet, again, a unique player in cybersecurity because of the network hardware component being so large, such a big part of the business overall. And importantly, throughout this downturn, they have actually maintained very, very high profit margins. Q3 was no exception. GAAP net income, new record of 540 million. And if you prefer using free cash flow, or if you use a combination, multiple profit metrics, free cash flow, gotta like this one as well, 572 million in Q3. Note that this is not a new record for free cash flow generation. Free cash flow is a lumpy profit metric, but you'll notice here on this chart from FinChat, Q1 of every year tends to be a cyclical peak for free cash flow. A lot of that just has to do with the timing of billings and customer contract renewals at Fortinet. So seeing free cash flow so high in Q3, which tends to be more of a seasonal down for their free cash flow generation, is really, really solid. Great news.
And the balance sheet for Fortinet is also exceptional. Cash and investment balance is actually better than it ever has been. $3.7 billion in cash and short-term investments.
And pretty minimal debt, just 994 million. Yeah, this company has lots of money to play with.
And that cash that they have also includes an acquisition for the assets of what once was a private startup called Lacework. Lacework focuses in CNAPP, or Cloud Native Application Protection Platform.
Yeah, this was announced this past summer. And now that we have the Q3 2024 report in hand, we know what Fortinet actually paid for those Lacework assets. Lacework used to be a unicorn, meaning it used to be valued at $1 billion private valuation. Fortinet was able to pick this up in the aftermath of the 2021, 2022 cloud software boom and bust. Just $241 million, it seems, was paid for those assets. And Fortinet gets to plug this right into their expanding software services platform. And because these assets were picked up on the cheap, they can probably take their time with monetizing it and make sure that they fit within that operating system that they've built so that all these services play nicely with each other. There's a nice user interface. Customers get to continue using that operating system experience from Fortinet that they're used to seeing.
So let's talk about the growth trajectory for Fortinet. This is the billings sent to customers. You can see the older networking component is still rebounding, but the new SASE and security ops software is driving the growth for billings. We're not really using billings to project future growth rates. It's just indicative of how the business is gradually evolving. Speaking of how Fortinet is growing and evolving as a business, let's circle back to the SASE platform, which unifies traditional network security with new cloud-based security needs all in one package.
Yeah, SASE, of course, acronym in cybersecurity world that stands for Secure Access Service Edge. That was a term that was founded by a tech researcher Gartner, but has kind of become industry standard terminology. And this is where all of the big platforms are headed, trying to unify all of these different services into one package and making it easy and convenient for their customers to have a one-stop shop, basically. This is why Palo Alto Networks has been making this push into what they call platformization. But this is essentially what we're talking about here. Multiple services, one service package. We continue to think Fortinet does have a unique advantage in pursuing the SASE market because of those custom chips, those ASICs that they have that power their hardware and provide that single operating system for all the different services, regardless of which services a customer may need, which ones they don't need. It's unified together in one platform. So on this slide, Casey, you see here in the middle, in the top little graphic of the cloud SASE pops. What is a pop exactly? Let's remind the folks at home.
Yeah, pops, not a soda pop, but points of presence in data centers. And we highlighted this last year. Fortinet has an expanded deal with Google Cloud to build out the infrastructure of these points of presence. Each of those dots represents a data center location. Infrastructure build out in these data centers is one of the reasons that Fortinet has had a lumpy free cash flow. A lot of the CapEx has been spent by Fortinet on network security infrastructure in support of its SASE offerings.
Yeah, exactly. Google Cloud has the data centers available, but Fortinet still has to purchase and install the actual network hardware in those data centers so that their services work close to the customer, wherever the customer may be.
Let's shift to the valuation metrics for Fortinet. It looks rather expensive on a trailing 12-month basis, but bear in mind that this still includes the effects of prolonged network hardware downturn. Price to earnings around 46x and price to free cash flow around 42x. But what is it on a forward-looking basis? On a forward-looking basis, Fortinet is actually much more reasonable. You can see 39x on price to earnings and right around 34x on price to free cash flow. Wall Street seems to be thinking that the down cycle is also over.
Yeah, resumption in growth expected in the next year. And we're going to deviate from what we've shown you in the past in Fortinet and with a lot of other companies where in the midst of a down cycle, it was difficult to use valuation both on a trailing and a forward-looking basis because both metrics were being distorted by low profitability because of lower sales during the bear market. Now that we're coming out of the down cycle, let's take a look at a different metric that we often use, the PEG ratio, price to earnings growth. Notice just on a 1 year forward basis, next 12 months, there in the middle, 1.23. Typically, when you're looking at a growth stock, a PEG ratio of 1.0 is considered fair value. Anything less than 1 is cheap. Anything over 1, and especially once you start getting over 2.0 and higher, that could be indicative of a stock maybe being a bit overpriced. Of course, this depends on what you expect earnings growth rates to be, and this number can change depending on how far out into the future you want to predict the earnings growth rate. So this slide, again, from our friends over at finchat.io, just the next 12 months expected profitability. This would seem to indicate Fortinet maybe it's not cheap, but it's certainly not expensive either. If you're expecting a nice, let's say 20% increase in earnings for the next year or two.
So do we feel like Fortinet's a great business at a reasonable price?
It would appear that it is, and we've been very happy holding the stock throughout the downturn. Things have gotten bumpy along the way. Lots of doubts out there, a lot of curveballs thrown at this particular segment of the cybersecurity market, especially when some of the more software-based leaning companies like Palo Alto Networks and CrowdStrike, their stock prices have continued to go up. Fortinet, it's been kind of trading sideways overall for 2+ years. But we're still very, very happy with the way management has handled this and the way Fortinet is kind of emerging from this extended downturn. Things are looking like we're in pretty good shape, I would say.
Absolutely, Nick. We could totally see an acceleration in Fortinet's trajectory over the next couple years with a big boom in profit margins coming their way. Fortinet was a great buy all year as the stock rallied, and it's probably still a really good DCA or dollar cost average candidate for anyone that's looking for a cybersecurity starter position.
And just a quick note on that dollar cost average, it seems like some of the newer mobile brokerages out there are pushing this idea of doing daily or weekly dollar cost average plans. Just be cautious out there, folks, especially if you're building a position in a new business that you don't know very well. Don't blow out too much of your portfolio allocation on one company, especially if you have very little personal history with it and you're still learning about the company. Start small and let the position build over time. Consider, if at all, using a DCA that makes a purchase maybe on a monthly basis, maybe even a quarterly basis, depending on what your savings rate is, how much money you can put into your account, your total overall portfolio size, how many stocks you have or don't have already. Just bear that in mind. It's beneficial for the brokerages if you're placing trades daily or weekly. It's not necessarily a good thing for you. So just a little point to be aware of there when looking at this business and others that are going to exhibit some above average volatility in stock price.
Hot investing tips with Chipstock Investor. Thanks everybody for watching this episode of Chipstock Investor. Make sure you sub to the channel and check out our Semiconductor Insider membership. Gets you access to our Discord channel, and that is where all of our content, all of our research is located. You get show notes, live Q&As every week. You get to talk to us.
And the community.
Semi-insider
community is pretty awesome. Some really great folks over there adding to the overall learning experience. Check it out.
Link in the description below. See you all soon at Chipstock Investor.